This meeting is being recorded.
Hello and welcome to Money Mondays. I am Vihil Vigil. I am your host for the weekly podcast talking about all things money. For those of you who are interested, we started this program based on the May Money Talks Mastermind. That was quite a beneficial program that several of our program participants just really loved, and it's something that I've continued to do over the years. And today we will be having a special guest later on. Jo Ballagh, who I'm pronouncing her last name correctly, will be joining us in a little bit, and we are going to be talking about all things today on emergency plan basics. I am Vihil Vigil. I am your International Women's Empowerment Business Coach. I've been running the Empowerment Empire for since about 2018, and that has been really fun. Growing the organization to empower and to work with women and to help you to find some of the best opportunities for yourself, whether it be in professional and personal development or in business and in life. So for this new program, we are doing 100 ways to manage, maintain, and grow your financial standing. And I'm so very excited to be presenting this second program for our top 100. So this will definitely be taking us a while to get through. And if you go onto our Empowerment Empire YouTube channel, you will find this background for the podcast, and you'll be able to take a look at all of the various videos that we are posting for this exclusively Money Mondays program. So I'm going to share a screen and we're going to get right in. We launched the first 100 topics not too long ago, so you were all able to see what we will be covering. And if there is a topic that you are interested in being a speaker on, please reach out to me and let me know. We will be getting the next 25 speakers scheduled here shortly. So I will be very excited to get more of you involved, and let me know if you're interested. So let's go ahead and get started. Today we are talking, there we go, and let me see if I can get over to my, there we go. Okay, let's make sure we've got the right screen. Okay, confirmed. So welcome to Money Mondays. The program is designed to share with you insights that you need to start making better financial decisions for yourself, your family, your personal career, your businesses, and for the sake of building the generational wealth for your family that you have always wanted. I am your host, Miss Vihil Vigil, and let's get going. This is all a part of the workbook that you receive when you sign up for the program. It talks a little bit about a vision and mission for the Empowerment Empire, so that if you are interested in a little bit learning more about the program and learning more about all of the different opportunities that the Empowerment Empire provides to you as a woman professional, definitely take a look at women'sempowermentcoach.us. This is what I recommend for when you are attending the program. Your laptop for watching the video trainings. The workbook is going to be downloadable, so you will be able to see it once the program has been placed on YouTube. You'll be able to find the link back at the homepage of the website, women'sempowermentcoach.us. So let's get, these were the 100 topics that we launched a couple of weeks ago to pique your interest as to all the things that we're going to be talking about. Today is all about emergency fund basics. Right. So your tasks is to listen to the podcast, download the workbook for yourself. It's free. It's something that will help you get through this brief section, which we're going to talk about these top 3 things. Reviewing the lists of why having an emergency fund is super important for you, for your family, for your business, and for your life. Determine your ideal emergency fund minimum dollar amount, ideally, after considering your regular expenses and potential emergency ones. And then we're going to provide you with tools to create your personal budget, business budget, and create a family or vacation budget. And this is all going to come back to help you with looking at what your life currently costs you, and then you can set aside your emergency fund dollars. Okay, number one. Emergency funds provide you with financial security for unexpected events like vehicle repairs and transportation costs, illness, physical accidents, income reduction, anything unexpected. Your child gets sick, they get injured in sports, you get an illness, you injure something, you get hit in a car accident, you have all these things. So having an emergency fund greatly reduces your reliance on credit cards or loans during emergencies, or having to pull out of your retirement account. Not something that you want to really rely too heavily upon. Number three, building your emergency fund. Oh, lost it. Building your emergency fund will offer you and your loved ones peace of mind and will ultimately reduce most financial stress. This is one of my most favorite pages that you will be completing if you download the free workbook. So consider the following questions and complete the worksheets below to get a clear understanding of where around your emergency fund balance should be. And remember, it is okay to start small and build up your emergency fund over time if necessary. So think about your family size and financial obligations, then complete the worksheet below. First question asks, what are your total typical monthly living expenses? If you didn't attend the budgeting podcast, then rewind and go watch that one so that you'll be able to understand and see clearly what your monthly living expenses actually are. Then once you have that dollar amount, multiply your monthly living expenses by 3 to find your average quarterly expenses, and then write down that amount below. Then multiply your quarterly expenses by 4 to get an estimate of your annual living expenses, not including any trips or vacations, and then write that down. So first, you're going to take your monthly expenses and multiply it by 3 to get your average quarterly. Then you're going to take that number and multiply it by 4 to get your annual living expenses. Then we're going to have you look into where to keep your emergency funds. Let's just go back for 1 minute. So now that you have an idea of what your annual living expense looks like, what you're going to want to do to find your emergency fund is you're going to want to ideally have 1 year of living expenses set aside to be absolutely comfortable. Now, whether it takes you 1 to 5 years to build that account, start working on it today. Start with having 1 month of funding in a bank account, then go to 2 months, and then go to 3 months. Every month that you can build up an emergency fund account, the better off you will be in the long run. And ultimately, if you don't need it in the end and you have a year's worth of living expenses, then you know what? Maybe you can take a month off. Maybe you could take 2 months off, and you can utilize that sort of emergency allowance to fulfill some areas like that. Not that I recommend utilizing a vacation budget or utilizing a emergency fund budget to fulfill a vacation fund. But as you will see as we go through these topics, once you have these certain types of accounts, you are able to move money back and forth across them, especially since some will have higher interest rates for you. And that's what we're going to get into next. So where to keep your fund. Look into your local credit unions or investment banks for high yield savings accounts for easy access. Look into opening a money market account for slightly higher interests, and keep your emergency funds separate from your regular checking accounts or your regular savings accounts so that you can avoid using that money for anything else other than a true emergency. I know we just talked about utilizing that to fund some vacation time, but that's after you have at least 12 months of an emergency fund built up. You're going to want to also talk to your financial advisor about considering laddered CDs for a portion of your emergency fund so you can gain higher interest. And if you've never had the experience of speaking with a financial advisor, I highly recommend you doing so. Consultations are always complimentary, and you learn so much about yourself, your spending habits, about different opportunities you have to keep your money, so many different things that you can learn about when you speak with a financial advisor. Okay, so really quickly, what constitutes an emergency? This answer of what constitutes a financial emergency will vary from person to person and from family to family. So below are some common examples that take a moment, or below are some common examples that I want you to read or that I will tell you about here in just a moment. And then I want you to take a moment to write down others that may be a factor in your own life or in your own family. So number one, job loss or significant income reduction is the number one reason you would need an emergency fund next to major medical expenses. As you age, or as you have children, or as your parents age, or your children have children, there's always someone who's going to be needing taken care of. And sometimes it's a major medical situation that you did not expect. And this gives you a chance to have that peace of mind, to have that money already set aside specifically for a medical situation. Okay, so unexpected home or car repairs. What are you going to do if you need to drop $5,000 on your vehicle? Well, from experience, I can let you know you will draw it out of your retirement fund or pull it from some other place or stress all over the place trying to figure out how you're going to come up with money for an emergency vehicle repair. And trust me, you do not want to have to do that. Then unexpected home repairs. What if something breaks in your house and you don't have the proper type of insurance, or you're renting and you don't have, coverage for things like, your bed broke, or, you have your own home and the refrigerator went out and it wasn't under warranty. You don't have a homeowner's insurance policy that covers that refrigerator. So just trying to think of all of these horrible things that could go wrong. And then, of course, unplanned travel for family emergencies. What if you have a family member across the state, or your child needs a surgery in a different state and you need to pay to get there? And if you don't have an emergency fund set aside, it's going to be very difficult to get you and your child to that place. Okay, next. So, how to build your emergency fund. Set a monthly savings goal. Set up automatic deposit from your income. Use windfalls like tax refunds, gifts, and bonuses to boost your fund. And then cut unnecessary expenses to increase your savings. Once a month, if you're like, oh, we usually go out to eat 3 times a week, how about if you take just a few moments to put that money aside, and then you will be able to take what you would have spent out on dinner and put it into an emergency fund savings account. It's a quick and easy way to put a little bit of money aside, and then you will be able to benefit from that quick opportunity. Okay, let's keep going forward. Our guest is just about to join us. Okay, maintaining your fund. Emergencies happen. It's when we are prepared for their possibility that we are able to recover faster, experience less stress, anxiety, and loss. Regularly review and adjust your fund amount as needed. Make it a priority to replenish your fund after using it by adding extra contributions until you are back at your desired balance. Consider increasing the fund as your expenses grow and add extra contributions when possible. Reassess your emergency fund needs annually. If you have saved additional funds, roll them over into a longer-term savings product like your IRA or some sort of other retirement vehicle. So common mistakes to avoid. Using your emergency fund for non-emergencies, clearly. Keeping too much funding in low interest bearing accounts, another reason to talk to your financial advisor. Not starting a fund because you can't save the full amount immediately. Start small. Absolutely start small. Number 4, neglecting to adjust your fund as your life circumstances change. If you can afford to put more in savings, put more in savings. So, in a few closing thoughts to consider about your emergency fund before we get to our very special guest speaker. Remember, an emergency fund is a crucial component of your financial health. It provides you with a safety net for unexpected events that will happen to you personally, to your family, and even to some friends that you want to help. Having a well-funded emergency fund also provides you with peace of mind in your day-to-day life. Let me just reach out to our person. Consider separating your funds for different types of emergencies. Remember, one for health, one for emergency vehicle maintenance, etc. Remember to balance your emergency savings with other financial goals that you are working towards accomplishing. Both or all are important and they are all achievable. Inform and involve your family members about the purpose and use of your emergency fund as it may pertain or benefit them. Or in the case of a family member, you may need to access an account for them. They may need to access an account for you. That does it for our quick share and our quick notes on how to get started with your emergency fund. Just the real basics. As we've talked before, the program here is to really talk about getting you to the point where you're able to just start thinking about these money matters. Start thinking about different ways to save. Start thinking about being more involved in your financial education than perhaps you had been previously. I think this is a really great opportunity to just take pause and see what is so important to you that you need to start financially saving for. Not only retirement accounts, education accounts, but definitely emergency funds. Let's get into our guest and let's welcome her to the program. Hello, Joe, and welcome to the program. Can I hear you?
Got my volume up and my mic on.
Here we go. I think I had to turn my volume up. Hi, and nice to meet you.
Me too.
We started the program with going over some of the emergency fund basics that we have talked about previously, and then also about the show, what the whole program is geared towards, where we really are trying to help people in general, but also the program is geared towards women, about taking an opportunity to learn just some of the basics on really thinking about how to have conversations with yourself and with your family about money matters. So every Monday, we do Money Mondays and talk about one of the 100 topics that we identified. So for those of you who are joining the program, Joe, and I want to ask you, is it Ballagh? Ballagh?
It's however you want to pronounce it, but we say Ballagh.
You say Bella? Okay.
Ballagh.
People always ask me, and so I always want to make sure to ask the same because I always want to make sure that I am properly pronouncing your name. So Joe is joining us because she is a business professional with a roundabout experience of a number of different things. And I am going to share Jo's bio with you because she has such a great background in lots of different areas that all have to do with your cash. So she is a financial coach, a real estate agent, a DIY consultant. I love all of my ladies who are just like, I do this and this and this and this. And you know what? And I can do that too on my off time. I love this. An all around money mindset motivator. She's based in Meridian, Idaho. As the founder of FIFM or FIFM,
We say five them, yeah, but you can say FI.
which is a financial group built on collaboration to help women gain confidence and clarity with their money. Jo is passionate about teaching simple, practical strategies to build wealth and become financially savvy. As a co-owner of Opulence Realty Group, Jo has years of experience helping clients navigate major life transitions through real estate and brings a boots on the ground perspective to financial planning. We just talked about reaching out to financial planners and financial advisors, and so many people are afraid and scared to do so because it's different. Maybe they haven't shed away all of the misconceptions or the barriers that they have been taught growing up to not talk to other people about money. And what a beneficial opportunity it is to be able to really do so.
Yeah, well, we've got so much generational wealth trauma that we've gotten from our parents and whatever they were raised with. And so, yeah, to be able to kind of cleanse that and just be able to talk freely about it is, it's unusual.
It's hard. Yeah. I mentioned in several of the programs, there's a book by Carrie Schwab Pomerantz, How to Talk to Your Family About Money. I have purchased that book, I think 3 or 4 times. I think it was 4 times recently because I keep giving it away. And, coming from, a Native culture, from a Hispanic culture, my background is very, number one, it's not extremely common for the women to have a hand in dealing with money. Or the matriarch of the family takes care of all the money and she doesn't tell anybody. So there's not a lot of sharing that's going on. And when I decided to be a parent, I wanted to absolutely break that cycle. And so I talked to my daughter, who's now 12, all the time about her ideas and expectations and experiences of spending, saving, and earning money. So one of the other goals about the Money Mondays podcast program is to start breaking that cycle that other people feel so stuck in, where they're not comfortable talking to their family about money. At the end of the emergency fund basics spreadsheet that I was sharing a little bit earlier, I had mentioned, don't keep it a secret that you are building a emergency fund for yourself, because if you're the one in the emergency, someone else is going to need to access that funding for you in some way, shape, or form. So there's so many details that I'm sure that we could get into on this conversation, but I wanted to just kind of open it up to, we covered the basics before you joined us, Jo, just on like why.
Yeah.
And you should tap into a financial professional to help you, why it's important, why you should build it and not use it for a vacation fund, unless you've got like 12 months of an emergency fund and then you want to take like a month's vacation. Tell me how you approach this topic with some of your clients or people that you have this conversation with.
So it's always a holistic perspective, right? So some people, an emergency fund needs to be a lot larger because they feel more insecure with their finances. And I'm one of those people. So some people feel good with the Dave Ramsey approach, where it's like, oh, you just save $1,000, you put it in this account, and then you can go on and do some other things while you build this a little bit higher. To me, $1,000 doesn't cover anything. It's a set of tires, and that's just not that much anymore. So
Yeah, exactly.
if you take some of the Financial Peace University and Dave Ramsey's teachings are really good basics, but we've evolved from there. And so throughout all of the different podcasts and groups that I've been a part of, there's two different philosophies, and it's really going to be a personal, which one do you gravitate more towards, which one feels the best for you? And one of them is the 3 to 6 months is your starting point. So if you can save 3 months, that might help you with an emergency. But if you have a 9 to 5 job, you're not secure in your job. You will never, I want to just emphasize that if you have a boss, you also have a boss that can tell you no longer work there, which is what a lot of people have experienced lately. So building that up to the 6 months can help you feel secure in a home emergency, but also that emergency should help carry you in the event of a job loss. And for us entrepreneurs, it's also the roller coaster of the income, help carrying us through the low times. And that's really where deciding how much is enough is going to be important. Then the other philosophy is you take all of your minimum payments. So your health insurance deductible, your home insurance deductible, your car insurance deductible, and maybe another month or so of living expenses. And that's your very bare minimum emergency fund to start with. Because if you get into an accident, you can pay the minimum and you can continue on with your day. You go to the hospital, you break a leg, you can pay for it out of your emergency funds, a true emergency, and then, can go back to work and move on with it. So seeing which one feels best. Yeah, there's a couple of different people who are really realizing that that's a tangible way to give you a dollar amount and not just arbitrary 3 to 6 months of living expenses or 3 to 6 months of your income. So it gives you a, well, why? Here's why.
And I think it's kind of a mindset shift when you're thinking, if I can pay the minimum, deductibles on all of the emergency insurance programs that I participate in, that can cover me at least getting in the door.
Exactly. Now you're going to go to the hospital and not say, I can't afford it. So that really does give you a little bit more peace of mind. So again, it's an emotional, it's a mental game of what would make me feel comfortable using my emergency fund or needing to tap into it. A job loss is a big deal. So covering your expenses from your job, but then also having those deductibles covered as well. So
I like that a lot. That's a really, really good piece of advice. I like that. Just to kind of step back, I wanted to also touch base on your an FIFM, your financial wellness group, I would say.
So
tell me about that.
Yeah, so it started with me just raising my hand in a local Facebook group saying, I would like to have some more friends who want to talk about money because, you have friends for different things. So I have my friends that I play softball with. I have my friends that I, go golf with. And not a lot of people want to talk about money and they don't really want to talk about it at a higher level. So a lot of people are like, oh, can't afford that. Or, I wish I could go on that vacation. And I wanted to talk to people who we're talking about the vacations and we're talking about ETFs and IRAs and self-directed IRAs. So it started as who wants to meet up and talk about money. And it's kind of evolved into more of a collaborative, let's all learn together. So we've had a crypto presentation. We had a self-directed IRA presentation. We gone through one of our gals. She's like, can I still afford to retire at 62? And pay off my rentals and have X dollar amount. And we created our own spreadsheet because there wasn't anything that existed. So if you amortize here and you pay here and you add more to your principal here, boom, here's what you'll have at 62. And so it's just a really fun collaborative group. We meet up once a month. Our next meeting is tomorrow. So join. I'll give you the details.
I know, I would. So many of the podcast guests are spread coast to coast in the United States. And I want to say it is rare that I have someone in my own neck of the woods who I could actually go and meet with you in person and have coffee and talk. So I would. Yes, please send me information. I would love to attend. I think I probably can squeeze it for sure.
That'd be great.
So tell me, so we talked about what a fund was and why everyone needs one. We talked about, your ballpoint, how to figure out a dollar amounts, go with the deductibles on what you have for all the things, and then a couple of months. I like how, so for all of our listeners here, Joe is spectacularly organized and sent me this awesome sheet that has, not only her bio, but also some really great questions that got me thinking, like how do we think about the real life experiences, the curveballs, the real talk when it comes to emergency funds, because we don't want to talk about all the bad things. And emergency fund is all about talking about the bad things, all the things that could happen. We don't want to be super hypochondriac over here. Like we do want to be mindful of, not like, going down the rabbit hole. However, like that is sort of the direction that you need to consider when you're thinking about what would make you feel comfortable. And not only you, but the fact that you probably have family, you have a pet that might need food, you have, not to mention your house and the lights and the water, the electricity and all those things. But if you were not able to be as large and in charge as we all are, and we all like to be, if you are incapacitated, what is your child, your spouse, your partner, your parents, someone, your power of attorney? That's another thing that we'll talk about later is power of attorneys. Um, how do you give them instruction on how to handle your emergency funds? Um, and how how comfortable does a balance on a fund make you feel
Mhm.
if you considered the thought that you were incapacitated and someone needed to gain access to funding that could help save your life?
Yeah.
I think we don't want to think of it as that extreme, but we should, because it can quickly get there.
Yeah.
Yeah.
Have you guys talked about setting up living trusts yet?
No, we just have gotten started with like, money basics,
Yeah.
setting up budgets. Like later on down the line, we do talk more about investing in accounts and estate planning. But feel free to throw in what you think would be most helpful, because I think when we start with the basics, it can kind of be not enough
Yeah.
for people to pique their interest. So tell us your perspective on like the importance, the vehicles, the routes, the end solution that makes like you most comfortable.
Yeah, I feel like every single person that has any kind of asset, whether that's a home or a bank account, and they don't want it to go to the government and they don't want the government to decide where it goes, should have a living trust and a revocable living trust with an estate planning attorney. There's some online ones that I've seen, but there's a couple really great estate planning attorneys out there that I think you should reach out to. And what they'll do is they set up your power of attorney, they set up your health directive. Um, if you don't have any heirs, like I don't have any kids and I have a partner, but we're not married. So I have to make sure that someone knows where I want my things to go to, because it will either
Right.
go down, it either goes down to your kids or out to your parents, or no, down and up. So it goes down to your kids first, then up to your parents, and then they'll go out to brothers, sisters. And then if you don't have any of those, I also don't have any brothers and sisters. It's just me,
Right. Only child as well.
only on all sides. So it'll go to my cousins. I don't want my cousins to have all my stuff or decide what's going to happen to it. So part of it is selfish for me. But if you've got kiddos, you don't want them to make them go through probate. Probate is it's a necessary government process, but it doesn't have to be as daunting for the people you leave behind. So having that living trust in place has everything listed out. It protects your loved ones from having to deal with all of this stuff.
Yeah.
So putting all of your bank accounts, all of your passwords, all of your, your serial numbers to your, if you have guns, all of your, label all of the things that are important to you, all your vehicles, all of your house stuff, it's all just there. So if something does happen and you're incapacitated, that power of attorney and that health directive is within your trust.
Yeah.
All of your instructions are there. So that should be everybody's end goal, is getting a revocable living trust completed with an estate planning attorney. And it's costly, so you want to plan for that, and that could be a part of, after your emergency fund is in place, you put a savings account in place and you start planning
Yeah.
to get that taken care of. Because an emergency fund in what we're talking about with the very, very basics is, you fall off the deck and sprain your ankle and you can't work for a week.
It's like short term.
Yeah. Instead of, a long-term disability, if you're in a car accident and it's your fault, how are you going to pay for that? That would be, you need to make sure you have extra insurance. You need to have, long-term disability insurance. That's, I would say, quite a few steps forward. So I would say,
Yeah.
instead of making people think it's a daunting task with the, if you're in capacity, I think just step back and just say, okay, if I couldn't work for a month, how would that affect me? Or if I, think about the worst case scenario on a short-term basis to start with. You could spin into the what ifs all day long. But I do think that end goal should be a living will with a directive and telling everybody what you want, all the way down to what do you want to do with your body, and
Right.
pre-plan and prepay for that if you can.
Yeah. I have been seeing on various social sites books, something along the lines of like everything you need to know about me.
Yeah.
And they are, some of the covers are really pretty, some are more masculine, some are more feminine. They're kind of like a journal, but they are really geared towards all of your passwords go here, all of your ID numbers, all your VIN numbers, your serial numbers, all of those things. And then you fill that book all up and you put it in your safe. Or you go get a safe deposit box and you put it there. And then make sure someone knows that safe deposit box exists.
Yeah. And that's a
Um,
really great first step, because it does take
yeah.
out the lawyer part. It gives you, and then that also gives you the point, okay, now I can afford to set up that trust. Here's all my
Mhm.
information. And, it makes that
Yeah.
process easier. That's a really great first step for
That's
sure.
what I was thinking, is that how can we sort of take away the daunting nature of it all? Where, you're going to walk into an estate attorney's office and they're going to have like, a list of questions for you. How about, what are some of the things that we can start doing? It's like pick up a book like that, or, even just start building it yourself. You don't have to go buy a book. You could just, create a spreadsheet on your computer. You could, grab a quick journal at the store. We all have paper around the house, like something just to get started. And then what I always like to recommend to my clients is give yourself a pre-scheduled set amount of time on your calendar where you're going to look at that at least 5 minutes a week, 10 minutes a week. And before you know it, if it's on your calendar, I mean, I have to schedule everything because though I'm also an only child, but I have an only child and have a very big dog, and we have sports. She also plays softball. And we go snowboarding and horse riding and like all these things. And you don't necessarily want to take 5 minutes out of your Sunday, which is kind of like your downtime, to do something like that. But if you look at it in the long run, what great benefit are you giving to those that you leave behind, or who are wanting to be of help to you if you are incapacitated, or if need someone to help take care of you? Why not do them the service of putting it all down? Simply from like your insurance information,
Yeah, who are you insured with? And sometimes that's the smallest question, are you with Allstate or State Farm, and who's your agent? What's your agent's number? Yeah, really all the basic things. And I use it all the time. I've kind of learned a crutch on it, but ChatGPT, all you need to do, if folks out there have an account,
Mhm.
log in. If you don't have an account, get an account. It's free. And just say, hey, chat, I am pre-planning my living will. Can you give me 50 questions to answer that would help my family in the event that I become incapacitated? Just use those exact words and it'll spit out 50. And then when you're done, you can say, hey, chat, give me 50 more. It'll give you all of them. And then you can say, what am I missing? And it'll be like, have you thought about this? That's just AI is scary and brilliant all at the same time.
I know. Agree. Let's look at some of the other pieces of your expertise that we can go over in regards to emergency fund basics. So, oh my God, we're going to have lots of conversations because clearly, Joe, you have got so much going on about, all things money mindset. I like how you broke it down to like insight and lifestyle integration. I think for so many, that confidence behind being willing to talk about the money situation, whether it's a good situation or a weird situation or, lacking situation. How do you inspire people to, I like this one. What do you say to clients who feel ashamed about not having it together by 30 or 40? Um, what money advice do you hear a lot that you completely disagree with? How do you help people sort of disseminate their anxieties over just simply having the conversation over being smarter with their money?
I think for me, there's a really big emotional tie to money based on how you were raised. And I think a lot of us, I don't like to use the word should, but I'm going to use it. A lot of us should try to remove the emotional connection to money and see it as what it is. And it's a tool. It's a tool to be used to purchase things for us to either survive or thrive, or I guess and or thrive. So you could use it to buy groceries, or you could use it to buy a steak dinner at Ruth's Chris. What do you want it to be? How much of a tool do you want it to be used as? And then that also needs to be one of the biggest things I have to work with folks on is their mentality and their money mindset. And there's so many books out there, The Psychology of Money, and then there's a book called The Money Mindset. And it really is getting into this, get out of the feeling of lack, get into the feeling of abundance, and then take that emotion out and just look at the facts. How much money are you bringing in? How much money are you spending? How much are you investing? How much are you saving? And at that point, it's literally black and white. And I will rip all of your excuses out. And if you aren't earning enough to pay your bills, how do you want to change that? Do you want to go and earn more? Do you want to get a side hustle or a second part-time job? Or do you want to cut your spending? Where's your value? And it's not my opinion, it's where's your value? Is if your time is more important, then you need to quit spending. But if you really want to go get your nails done, mine are not, I don't value that. I don't value getting my hair done. I would rather spend it on, doing another home renovation because I can't stop. And for me, that's where I have to say, okay, that's not worth it anymore. I'm not going to spend money here. Or, I really like my lifestyle right here. Now I need to earn more to support it because I'm not saving enough. I'm not investing enough to get to where I want to go. So there's the emotional aspect of it that's there. You have to acknowledge it, but then you have to totally put it on the shelf and just look at the spreadsheet and make it a game.
Yeah, no, I love that. I think one of the things I always tell my daughter is that one of my number one favorite subjects in school was always math until we got into theoretical math.
Yeah.
Because there was always an answer. It was always in black and white. Your numbers aren't necessarily going to lie to you unless you're going into theories and futures and investings and whatnot. But when you're just looking at expenses, income and expense, it's going to be a very clear picture if you're honest with yourself, if you're honest with your spreadsheet and you actually put down everything that is, truly coming in and going out. I like what you said. I usually have very long manicured nails about 8 months out of the year. But during the summer, I've got, as opposed to spending money on manicures, I have my hands in the dirt all the time. We are planting, we have like 50 vegetable plants in our backyard right now. We're planting trees. We're doing this whole outdoor, we spend a lot of times outdoors. And it sucks to break a nail on the mountain because then you're walking around with one less nail on the mountain all day when you're like hiking or doing something or whatever. So if you're going to seasonally have different lifestyle sort of activities, then be willing to give up something that you've been holding on to for so long.
Yeah.
If it's not going to serve your immediate purpose, if it's not the air you breathe, the water that your body requires, the food that you need to consume, it's time to sort of rethink our attachments when we're not really interested in like putting those aside so we can put $50 into an emergency fund. One of the examples I gave previously before you jumped on was that my daughter and I love to go eat out. I cook a lot, but I don't make sushi. Um, I love to eat sushi and I have made sushi in the past, but it's less expensive for us to go out to eat sushi than it is for me to go and buy all the things and maybe not eat half of it because you can't just buy two tiny little slices of whatnot. So that is one thing that we will do. But if we're going to have burritos, which I can cook with my eyes closed, or spaghetti, like the money that I would spend on that meal by going out, why not take that money and put that into a fund and decide to stay home and eat at home? Simple ways that we can just sort of shift our lifestyle requirements that are going to ultimately benefit us in the long run. It's really hard for people to want to do that, but if you prioritize financial security over instant gratification, then you'll start seeing that those trade-offs are not really a trade-off. They're an investment in yourself,
Yeah.
right? Um, when you are talking with someone about the necessity of having an emergency fund, and in future conversations, we will talk about lots of different topics, but so that we can stay on track for our listeners of this being all about emergency fund basics, what would you say are some of the top things that even your most, I don't want to say resilient, most combative clients
Yeah.
can even do?
I think what everybody needs to do, not even should, what everyone needs to do is take an account of your current spending. And so what I do with all of my clients, the very first thing we do is 3 months look back on all your expenses. And
Mhm.
ideally they're doing this on their own, so they're not having to pay for it. You can do this on your own. But sometimes
Yeah.
I help and I am the facilitator of all of this. And we go in there and we label. So we go through your bank account, go through your checking, go through your savings, go through your credit cards, go through all the random accounts that you spend money from, and start taking into account everything that you spend money on. And you need to give it a label, whether it's household, whether it's beauty, whether it's food. And I go so far as to eating out. I've also gone so far as to take out snacks, because why am I going to the store for chips when I have them at home? Things like that. So figure out where you're bleeding money out of. And once you get an idea of where your very basic spending is, you can start to categorize it and see what you're prioritizing and where you want your money to go instead. So if you're realizing that you're spending too much and you all of your expenses, you see a lot of Amazon expenses, and then you go through your Amazon expenses and you say, oh, this is more than just, shampoo, conditioner, and the basics. You have, maybe there's a spending addiction. So getting, or not even addiction, a habit, a mindless scroll. We either scroll Instagram or we scroll Amazon. And sometimes that
Mhm.
click buy is really, really tempting. So finding out where you're hemorrhaging your money, and then getting into, it really is going to be a psychology point or a psychology trigger at that point. And you need to realize what it is and acknowledge it and be okay with it. And then come to a point where you have to let that go. And then coming back into the emergency fund of realizing that this is an important piece of the puzzle. And, all the trinkets, like how many different things you have because you just mindlessly purchase them and you don't even need them. So bringing
Yeah.
all those purchases into frame and saying that could be put into the emergency fund, and really just getting yourself into a place where you acknowledge where your spending is and where it should be and what you can
Right.
take out. I had a client who was quite a bit older, and she had all of her money in a savings account. And I said, how much do you think you're spending every month? She said, oh, probably 5 or 6 thousand. And it was double that. And
Wow.
she didn't know because she wasn't tracking, because it was so easy when you don't look at it. And so putting things in place, whether you're tracking manually or you're tracking on a budgeting app, there's plenty of them out there.
Hmm.
Pen and paper, spreadsheet, whatever you need to do to just really see see where you're going. That is the absolute step number one that everyone needs to do, even before you open an emergency fund, because you don't even know what you're spending. So how much do you know what to save?
Exactly. There are, and they get better. Because I remember a couple of years ago, I was looking for an expense report app where I could just take a picture of my receipts, or, before everybody could just email me the receipt.
Yeah.
Then, and it would ultimately categorize it. It would pull out all the numbers, put them onto my QuickBooks, and then all I would have to do was review it to make sure that, it was accurate, every week or so. But the apps keep getting better. The tools keep improving. And one of the things I've talked to clients before is that because you've tried something once in the past doesn't mean it's not going to work for you today, but also it could mean that now that you know what you don't like with a tool to help you with managing your money, then now you know what to look for in something that does include these particular elements, about how you want to see your money being managed. One of the first things that we talked about in one of our first podcast programs was being aware of your spending and like building a budget for yourself and not seeing it as a restraint, but as an empowering tool. How can you be in charge of something when you don't even know what it looks like?
Yeah.
And a lot of us in the circle that I have worked in, we are all very type A personality women, and we like to be in charge of stuff. I have also met very many of my colleagues and friends who are very type A personality women who will just have someone else manage their financial picture, because they typically are of a certain professional level with a certain level of income. And they're like, well, I'm busy. I need to go get my nails done, and I don't want to sit and look at my spreadsheet. I think that's dumb. I have bold-faced said that to several of my friends. I love you, but that's dumb. If you're not having some sort of a regular review of your own finances, whether it's with your financial professional or it's with yourself and your spreadsheet and your workbook, then you are not empowering yourself. You are truly not allowing yourself the opportunity to thrive as much as you really could. One of the things what came to mind this past weekend was my birthday. We went up to Bogus and did the whole summer shenanigans. It was so much fun, just my daughter and I. And what we used to do is I would buy all this food and I would pack it all up, and then we would go up there and we would still buy food. And so this time around, I told her I'm not taking a bunch of snacks. And I think it's just making the decision. I've learned that I do this, so I'm going to just do this. And like saying it out loud, we are going to be doing this from now on. So for our next upcoming trips to, the ski resort, whether it's during the summer when my daughter snowboards, or it's during the winter when she snowboards, or during the summer when we go up there to play for summer sports, we're not bringing a bunch of snacks because we don't eat them and we still buy food up there. Or we're going to draw the hard line and be like, we will only eat our snacks, even if we have to leave hungry and hurry home. And I think ultimately it comes down to giving ourselves the permission to make the decision. And sometimes when it comes to money and it comes to those types of conversations surrounding our financial welfare, if we are from a poverty mindset, if we are from a mindset of less than, if we are not born into massive affluence and taught from a very young age on how to manage our financial wealth, our standing, our income, our expenses, which most of us, mass population, are not. We have to allow ourselves to push that fear out of the way and start fresh. You're not going to know everything. You will be making mistakes, but that's part of the whole learning process. And I think when we allow ourselves to do that, then we are allowing ourselves to learn. We are pretty much out of time. And I wanted to thank you so much, Joe, for being on the Money Mondays podcast. For those of you who are going to be listening in, Joe's planning on joining us for several more conversations where we can tap into her expertise and her knowledge on all things wealth management, utilizing a real estate portfolio to help with wealth building. We will continue having topics on generational wealth and being that first, or continuing to carry the generational wealth legacy and not letting it drop. Maintaining that for future generations. For now, give us some of your final thoughts, Joe, on some of the things that we've briefly touched base on, but also I always want to end each conversation with a look to the future and what could be even greater and even better future for us if we just do a small handful of things. What would be your thoughts on that?
I think one of my biggest takeaways from our conversation is making sure that everyone, your listeners, including their friends and family, just get the very basic of education, whether it's this podcast and then maybe they go and they read a book or they listen to other podcasts. Is start laying the foundation. If this feels either overwhelming or underwhelming, then go and learn more. Go and take your education to another level until you feel comfortable with taking that first step into opening an emergency fund or looking at your budget and getting really honest with yourself. And then trying to find those habits that you're putting in place that maybe you don't know you're doing, that you could, take a look at and change. And then also either reframing your mindset or creating a different perspective shift towards money, where it's not, there's no such thing as evil money. Get that out of your head, and just using money as a tool and seeing it as truly a tool to use, and you can either thrive with it or you can ruin a screwdriver just like you can ruin your budget. So make sure you got to keep sharpening your tools, and you might have to buy some more as they get dull. So
I really like that a lot. You can ruin your screwdriver, but you can always get a new one. You can always fix some things.
You can always get more money. You can always make more money. It's out there. It's abundant. It's everywhere. That's why people.
Joe, I'm going to have you stay on just a few more minutes, but to our listeners, I want to thank you all so very much for tuning in to Money Mondays with our very special guest, Joe Ballagh, and myself, Miss Vihil Vigil. We are all part of the International Women in Business Mastermind podcast from the Empowerment Empire, focusing on creating amazing opportunities for women to learn and share and create better lives for yourself on a personal basis, on a professional level. We range in conversation topics from personal health and wellness to building businesses and LLCs, and we will be talking more about investment strategies and how to build your estate plan, powers of attorney, so many things. So as always, when our video is uploaded to YouTube, I list our 100 topics. If you are interested in a specific topic to either speak on or listen in on to the program, make sure you sign up for updates and you'll be notified every time one of our podcasts go live. So thank you all again so much. Have a fantastic Monday. And Joe, thank you so much again for joining us today.
For having me.